you have to have grit to keep moving
Yeah.
forward and not only real estate investing, but just as being a business owner.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hey, welcome back to the show. I'm your host, Todd Dexheimer, and I got Ben Suttles. Ben, how are you doing today?
I'm doing good, Todd, man. I appreciate you, inviting me on and looking forward to adding some value today.
Yeah, so Ben Suttles is one of the owners of Distrupt Equity, and those guys are just absolutely crushing it. They're doing amazing work based in Texas. Am I right?
Yep, Houston,
Yeah,
Texas.
yeah,
Yep.
based in Houston. They got assets in Texas and in the South. And I'll let you dive into kind of what you guys are focusing on. But Disrupt Equity, is acquired, manages, and owns over 5,000 units, and currently owns close to $1 million in assets under management, mostly in Georgia, Texas, Florida, and Ben's got a lot of experience as an entrepreneur, over 15 years leading companies, both in the IT world and real estate. And he has successfully built over a dozen companies. So, man, Ben, welcome to the show. I've been meaning to get you on, I feel like, for several years. And I don't know why, but I'm glad you're here, man. I'm glad you're here.
No,
So
no, I'm glad I'm here too, man. I think we can both agree. We were talking before the show. Obviously, there's just a lot been going on over the last few years too,
that's
right?
true.
You
That's
know,
true. It's been a
we
tornado.
it's been a tornado of good, and some stuff good, some stuff not so
Yes.
good. And
Yes.
I think I look at every challenge as a learning opportunity too. And so I think people need to realize, especially if they've got assets that they're having some challenges with, what could you have done differently, right? To either structure it differently or buy it differently or manage it differently. And so, but yeah, no, that's been occupying a lot of our time. I feel like we're kind of getting into that buying part of the cycle again. I feel
Yeah.
you can just kind of feel it, right? I mean, things are starting to kind of, get unjammed. The Fed just, dropped rates. So that's good. I think it'll help some people. And
Yeah. That's a
now we just got
stimulus
to
for
get
sure.
through. Now I'm going to get through this election. And
Yeah.
then everything's going to be, we're at least going to know which way the wind's blowing on this thing.
Yeah, and I think that's the important part to get transactions done. Is which way is the wind blowing? Look, I mean, let's be honest. If you bought a property and I don't care when you bought it. Let's say you bought the property in 1999. It doesn't matter when you bought it. You watch this market go sky high, and you're going, man, my property was worth $25 million, right? I don't want to sell it for 18.5 million. Like, what are you talking about? It's not, I want to sell it for 25, but the buyers are going, well, dude, hey, I'm sorry, but it's not worth 25. I got to buy it for 18.5. And so that's what's been going on, is it's just like a seller buyer disconnect. And
Yep.
we're just going, oh man, I mean, like, we're just stuck, like, looking at each other going,
Yep.
I don't know. You move. No, you move. Like, who's move? We're frozen. And it feels like it's starting to thaw out a little bit more right now. I agree with you. I'm hoping it continues, and we can start getting more deals done. But the prices, of course, the price has got to be right. And you guys are the same way. You just got to be smart, buy it at the right price, and you guys are sellers too, I'm sure.
Yep.
And you got to sell it at the right price. So.
Yeah, no, I mean, we went into 2024 with a lot of hopes and positive momentum. And we went out to NMHC in San Diego. I think everybody was really, really bullish, and I think it just kind of got stalled out. And so that we're going to try to buy 5 deals this year, and we're under contract on our second one. That's probably all we're going to do for the year. So I think it's kind of an indication of just how slow it's been in 2024. And I didn't think it could get much slower than 2023, but I really ultimately do feel like it was just as slow this year. So, but you have a lot of pent up seller, product that has to hit the market at some point in the next kind of 12 months. And I think there's going to be some forced sales. There's going to be some people that are just going to say, hey, I just can't hold on any longer. I got to sell it. And then I think that's going to create some opportunity too. So, if you're listening to this and you're kind of like on the sidelines, should I dip my toe in? I think this is the time to start looking. I think this is the time to start looking to invest if you're just on the passive side.
Yeah.
Because I really think we're going to look back in the next year and we're going to say that was the trough. right? I mean, nobody can really call it, but I'm just saying, yeah, unless there's just a black swan event, I just don't see it getting any much lower than that. We're already seeing, some cap rates compression or cap rate compression in certain markets. And, and I feel like as interest rates kind of dive, it's probably just going to be, it's because at least maintain that, or it could even go lower in some cases. And that means that just prices are going to go up.
Yep.
So,
Yep. Yeah, I generally agree. I mean, we're definitely closer to the bottom.
mhm.
Um, whether we're there yet or not, I, maybe not. But I don't feel like even if we're not there, it's not like we have another 20-30% left to go. We might
No,
have a 5%. And if you miss the bottom and you buy as it's going down, you miss it by 5%. Who cares? Like really, who
no.
cares? As long as the deals hit the fundamentals, you're fine. And unless you're trying to flip the property and get it, gone in a year, which is probably
And
in
it
this
always
market
it
environment
always
is terrible.
whipsaws back. It always
Yeah.
whipsaws back too, right? So yeah, you might miss that 5, 10, maybe we'll call it 10%,
Yeah.
where that's really the true bottom. It's going to whipsaw back 20-30% anyway.
Yep.
Right. So, I mean, yeah, I think people always try to time the market. And I think we're a big proponent of always trying to kind of keep our ear to the ground. Getting a deal done is easier said than done, but we've always at least been looking. We've been talking with brokers. We've been
Yeah.
underwriting deals. We've been making offers. Now we didn't get a lot, right? Because obviously we're sticking to our box and the returns that we expected or that we need to hit. But I'm a big proponent of always being in the market because you just never know. And I think right now you're starting to see some not even distressed properties, just some just distressed sellers.
Yep.
The deal that we're buying right now is a perfect example. It's a guy whose loan maturity is up November 1st. He has to sell. He took he was under contract in 2022. That buyer had retraded him. He said, "No way, I'm going to hold out for another year or two." Got a slow jump on marketing the property over the summer, and now he's in a situation where he's selling it for significantly less than what he would have sold it for even on a retrade in 2022. And so I think you're going to see some of that where
Yep.
people are like, dang, it's already 2025. I got to sell now. My lender is no longer going to give me another extension. And so you're going to see some of that. And then maybe that's where that additional 5 to 10% price, difference is going to be. But you pointed out one thing that I think, Todd, that we should talk about too, is there's still a discrepancy between what a buyer will buy it for and what a seller will sell it for, regardless if we feel like we're getting a good deal right now. I just feel like there's just this, it's still somewhat of a buyer's market. And they're sticking to their guns in terms of the price and the terms. It's just not like it was in 2021 and early 2022,
Yep.
where
For
things were
sure.
completely different. And so I think that that's interesting to kind of see too, that and maybe as transactions pick up, you see that dislocation kind of come together a little bit. But right now, it's still pretty far apart in
Yep.
certain respects.
Yeah.
So,
Especially certain markets too.
yeah.
One of the I don't know if you're seeing this. Cause you and I play in different markets. But we Midwest tends to have owners that'll hold the buildings for a very long period of time. And I know the South doesn't quite have as much of that going on, but
Mhm.
what we've been seeing a lot of is people that are retired or somebody who's owned the property for a while ended up dying and handed it to their kids. So we're seeing a lot of estate stuff and we're seeing a lot of retirement coming up. Are you seeing the same thing in your markets?
I think because Texas and the Sun Belt has what was so popular for so long, let's
Yeah.
just call it for a better part of 10 years, that a lot of that, when I first got in the market, I did see that. In fact, actually,
Mm.
my first deal that I bought in 2014, it was a city 90 miles east of Houston. It's called Beaumont. For people that are familiar, it's a smaller town tied to
Yeah.
oil and gas and refinery. And, there's three partners. They're actually from Ohio. One of them had passed away, and the kids that took it over, like, they didn't want to talk to the lender, and so they just wanted to do a quick sale, and we ended up buying that thing at a 10 cap, because
Wow.
they're just like, they wanted to do a really quick sale. Now obviously this was 10 years ago too, right?
Can you
So
imagine buying a
we're,
pen cap right now?
oh man, I'd love a 10 cap right now. But so there was a couple of things that came together. But the reason I bring that up is that there was still some of that happening back
Yeah.
then, right? But because it was so popular, or this market's so popular, I think a lot of that have been uncovered. and repositioned, and the value add has been done 2 or 3 times since then. So you don't
Got it.
see that as much here. We also don't play in a lot of the secondary and tertiary markets. We're in a lot of the primary markets where, again, you're going to have more activity. You're going to have more, buyers in those markets that are going to be, talking to any and every owner and trying to get them to sell. And so, but yeah, I'd love to find some of those. There's just not a lot of them out there anymore, at least in my markets.
Yeah, the markets you play in, it you guys have like at least 5 times the transactions that we have here in
Oh,
the Midwest,
absolutely.
and there are a lot of owners that will build their building, and we just bought one. We literally just bought one. It was built in 1970, and the owner that built it, when he passed away, handed it to his kid, and then his kid had it, and now he just sold it to us. So it's been in that family since 1970, and
Yeah,
they
crazy.
finally just sold it. So that type of stuff is what's going on around here. And so it's interesting to see some of that. But um, you guys grew pretty rapidly, and have had a lot of success with it. Take me through, if somebody's like, hey man, I want to know, like a group like Disrupt, like what's their secret sauce? Are there like a couple things that you would say and point to that this is how we grew successfully, quickly, and that somebody else could repeat and do the same thing?
I mean, I would say I made every mistake in the book, and so I have a business partner. His name is Ferris Musa. He's a great guy. And I'm going to get to partnerships here in a minute because that's part of our secret sauce. But I think the one thing about being a successful entrepreneur is making those mistakes, learning from them, and keep pushing forward. A lot of people
Yeah.
get stalled out. They're like a deer in a headlight. Oh crap, what am I supposed to do now? And those are the people that get smoked. I'm telling you, everybody, even in this part of the cycle, when I'm talking to lenders about like, hey, who are you foreclosing on? What's happening? Each person that's been through 5, 6, whatever cycles, these old dogs have been around since the 80s. They say the people that are successful, especially in real estate, and I would also say this is as an entrepreneur, the ones that hit those brick wall and keep pushing forward
Mm,
are the ones that are successful. Even if it's just small incremental improvements and progress and forward momentum, that is what's going to make somebody successful over somebody that's not.
yeah.
Right. So,
Yeah.
so if you get anything from this podcast today, it's like that. My advice to people is there's inevitably going to be something that's going to go wrong. And it's going to be in that moment, it's going to feel like the worst possible thing. Your gut is just going to be wrenched. And you're going to be like, oh my God, what about my family? What about my spouse? What about my kids? All of these things. I'm telling you, keep trying to work it out. Make the phone calls, communicate with people, be transparent, keep moving forward. And I'm telling you, it will most likely work out. All of these bad things that are happening in your head, those are all the worst case scenarios, and none of that usually ever happens.
Yeah.
But people
Right.
compound
Our,
it. They think that instead of that one potential bad thing that could happen, that there's 20 bad things that are all going to happen all at once. It doesn't,
yeah.
life doesn't work like that. Right.
Right. Yeah.
So
Our minds tend to go to those bad things and think that that's all going to
absolutely.
happen. And
And so I would say that that's probably the biggest thing for me personally is that you have to have grit to keep
yeah,
moving forward and not only real estate investing, but just as being a business owner. And that's really what ultimately we are. Then we're just a business that buys businesses, and the business happens to be a multifamily property, right? And that's really a business in itself too, right? You got employees, you got payroll, you got all this
yep.
other stuff, right? It's just in the form of real estate. And so,
That right there, listen to that. I mean, because a lot of people don't think about it like that. And that right there is a big reason I started my podcast, quite frankly, is because a lot of people would just go buy a piece of real estate and think they're a real estate investor. No, you're a business owner. Your
yeah,
product is real estate. And so you got to make sure you can run everything like a business. I think it's so key what you just said there. And so many people just look past that and they go, okay, look at the numbers, look at the NOI, look at my returns. Okay, I'm going to buy this building. And then they buy it and they wonder why the heck it's terrible and what's going wrong with it. And I can't believe this. And it's not doing what it was supposed to do. Well, it's because you thought it was a passive investment. You didn't think it was a business. Run it
yeah.
like a business.
Yeah, and I had a partnership before Disrupt Equity, and that's how those guys thought. they wanted to buy a few properties. It was going to be like almost this passive thing. They still had jobs, and they found out very, very quickly, because I was the one doing most of the work, and I was complaining to them about how much work it was, right?
Yeah.
And how much risk we were taking on by not being more involved in this and actually understanding what was happening. Because, again, if you take your foot off the pedal on any of these properties, even after a month or two, it's very hard to work your way back. It's going to take you a better part of a year.
Yeah.
If you're not looking at it over, like, let's say 2 months, it's going to take you 12 months to work that back. And so, I would say, learn from your mistakes and keep moving forward is probably, the thing that I would say is important part of being successful. But, as far as like what our secret sauce is at Disrupt Equity, I'd say it's me and Ferris's partnership. They're very complementary in terms of our skill sets, in terms of our personality styles, in terms of handling of stress, in terms of being aligned, in terms of our goals. And so, and I know a lot of gals and guys that are type A, and they don't want to have any partners. They don't want to do it all on their own, and that's fine. So be it. But you're still going to have a number two and some people that are going to work for you.
Yeah.
And you still want those people to be aligned with you too, right? Because guess what? You don't know it all. You don't have all the time in the world. You don't have all the money in the world. You're going to have to partner or be reliant on somebody. And so find somebody in this world that is complementary to your skill sets, that is complementary to your personality style. I mean, like, let me give you if you're a hard charge and always, crazy, crazy, go, 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 you need somebody that's a little bit calming too, right?
Yep.
I mean, again, it's like your spouse, right? Opposites attract. I would say partners, and it's the same thing. I'd say really the divorce is just as messy too. So you want to find that person or those people that you can do business with and you enjoy doing business with, and that, hey, if things are going bad, that they're not going to fly off to Costa Rica and leave you holding the bag,
Yeah.
right? And so but that's really been, I think, our secret success. I mean, I'm kind of more sales marketing guy. Came from the IT world, where I was in a lot of corporate sales, and that I like that stuff. I like doing acquisitions. I like doing raising money. He was more from the on the IT development side, and so he's kind of more data processes, kind of getting into the nitty gritty details, all of that stuff. I hate all that, right? But he loves all of that. And
Yeah.
so it's been very complimentary, because he does all the stuff that I hate and vice versa. Right. And I think that's what worked out well. I think the other thing that was a secret sauce for us, and I think a lot of people have taken a play out of our playbook, is we kind of got ahead of a lot of this social media and marketing and Facebook ads and all of this stuff that people now take for granted, or not take for granted, but it's just part of what people expect. Right. When I got in this business, I mean, it was very, investor decks were very kind of rudimentary. People weren't really using email, as effectively as they should. They certainly weren't doing advertising, and there was some people that are on social media, but a lot of that has just over the last 5 years gotten a lot
For sure.
popular. And we were doing this way back in the day. And so I think that getting ahead of that, and there's always this new technology and new software, new platform that you have to know and learn and be a master of. But leveraging those things and getting ahead of sales and marketing, because if you're going out and you're wanting to raise capital, and this is for people that want to be a syndicator and they want to put deals together, they want to raise money, this is who I'm talking to. And for this example, you're a sales and marketer first and foremost. I hate to say it. You can say I'm an operator. Okay, you might be an operator, but you better have a sales and marketing guy or gal on your team, because
100%.
at the end of the day, you still have to sell the deal. You got to sell yourself. You got to sell your firm's potential.
Yep.
You're even selling yourself to the broker who's selling you the deal. They're really sizing you up to see, can this guy or gal actually get this thing across the finish line? Because they're putting their name on the line when they go back to the seller and say, yeah, XYZ firm can actually get it done. I know it. I feel comfortable awarding them the deal. There's a fair amount of, sway that those brokers have over the sellers. And if you haven't done a great job of selling them, they're not going to award you the deal, unless you're just paying something so stupid that they're like, hey, we'll roll the dice and let them screw it up, and we'll take their earnest money. But you also don't want to be that sucker either.
Yeah,
Right.
we literally just experienced exactly what you just said, Ben. There was a property that came on the market, and it's a hairy property. There's a lot of work to do on it. It's not clean. It went through the full marketing process. We were got in the best and final. We were the lowest offer on the best and final. Somebody else got the property, put it under contract, and they took a flyer on them because they were willing to pay way more. What
Mhm.
happened?
They
Exactly what
couldn't
you think
perform.
happened, right? It fell out of contract. We just got awarded it. We are still, again, we were in the best and final. We are the lowest offer in the best and final again. We got awarded the deal because we, exactly what you said, we sold ourselves to the broker. The broker, we got to know the broker really well, and they know we will close on that deal.
Yep.
If there's something wrong with that deal and we don't close, nobody's going to close, right?
Yeah.
And so they knew that, and we got the deal because of that reputation, because we sold ourselves on it, um, and we didn't have to pay the highest price.
Yeah. And I've been a seller in that situation. I remember there was an Atlanta deal where we went with, I don't think they definitely weren't the top. I think they were the third. But they had a strong track record. I gotten on the call. I felt very comfortable with the
Yeah,
guy. I knew that he had a good beat on debt and equity, and he was going to be able to put the deal together. And that's who we ultimately went. And we
yep,
gave up a few $100,000 to do it, but at the end of the day, we needed that certainty of close. Because we didn't have time to waste. And so, yeah, again, it goes back to selling yourself and doing it in a genuine way. You don't have to be the slimy sales guy type
for
thing,
sure.
right? You really want to build genuine rapport with people. And that's what the brokers, but also with your investors too, right? People, and I'm an LP in a lot of deals, and I back the jockey, not the horse. First thing I'm investing in is that person because I know, because I'm also a GP on stuff, that things are going to go wrong. Right. So, what do I like this person? Do I think that they can get it through to the finish line even when times are tough? Do they have the wherewithal to do that? Do they have the team to do it? Right. And so even as an investor, you're going to have to build up that rapport very, very quickly and allow them to like, know, and trust you before they're going to put the money there. So again, having that sales and marketing mindset. And even if that's not you, you say, I hate that. I am the spreadsheet guy and I'm the
Yep.
operator. I
Find
don't want to
somebody
do any of that
else.
stuff. Find somebody that
Yeah,
you can partner with that does do that.
yeah,
Right. And I would say that that's the other kind of, secret ingredient, not really a secret, but more just where I feel like we've been successful is we've been able to marry those two kind of worlds together very effectively.
yeah.
And we've been through some really, I mean, shit, I've been through COVID, I've been through the interest rate spikes, inflation. I mean, that's all in a matter of 5 years, and we're still humming. And, I mean, a lot of firms have imploded and,
Yeah.
we're still rocking and rolling. And so I feel good that I picked my partner very, very well, but that's also after I picked a couple bad partners prior to that too.
Yeah,
And
but
so,
one of the cool things about real estate is you can actually, it's each property is its own business, but you can buy a piece of real estate with a partner or two or three, whatever,
Mhm.
and you're kind of almost dating at that point in time. Now I don't want you to go about it nilly willy and just pick anybody just because they got a good
No,
deal. You still got to make sure, like your
yep,
reputation, by the way, is only as good as the people you partner with. So that's really key. But my current partnership, we did a couple deals together, and then we said, "Do you guys want to keep on doing deals with each other?
yep,
Like, who else are you going to do deals with?" And all three of us said, "Like, I want to do every single deal with you guys. Like, let's keep on going." So
yep,
that's kind of the nice thing, I guess. Real estate, you kind of date the people before you got to marry them. But
yep,
you're so right. You find the right partners, find the right people to align with. I know a few people that own their own, real estate firms. It's just them, but they've got fantastic COOs and CFOs and people that they have that they trust that really run the operation.
yep.
Uh, they're essentially partners. And so you got to find those right people, and the complementary people is huge. And then back
Mhm.
to the the raising capital, 100% right. The biggest thing I see with people that I talk to that want to raise capital, that don't end up doing it or do a poor job at it, is they just aren't salespeople, and they don't think that's important, right? And not only are they not salespeople, but they also don't take the time to learn how to be a salesperson. And I think that there's nothing more valuable in sales and marketing training for somebody who's wanting to raise capital.
Yeah. No, I mean, it really is. It's sales 101 stuff, right? I
Yep.
mean, you can be the best marketer in the world, right? Let's talk about like social media and Facebook ads and all this other stuff. You can be great at that. Guess what? At some point, the rubber's going to meet the road, and you have to get on the phone or get on a
To
webinar or
talk to
get on
somebody.
a Zoom call and talk to somebody.
Yeah. Yeah. Yeah.
And they're not just going to like go through some funnel and automatically give you money. If anybody did that, I wouldn't even want to take their money. I'd be like, what's going on? That's very risky. Do you even know what you're investing in?
Yeah.
And so, yeah, I think it all boils down to being comfortable talking to people and just being genuine,
Yeah.
right? Knowing your facts, knowing, the downside risks of your deal and how you're mitigating them. I still go back to, I tell the story a lot, going back to my first deal. I didn't have any business buying that damn thing, but I had a good partner at the time who kind of lent his good name. And they're like, oh, if Mike's, on the deal, then okay. So like, tell me a little bit about the deal. Well, the one thing that I was really, really good at is I knew that deal backwards and forwards, inside and out. I knew anybody asked me a question, I would have the answer for that. And I said it very, very confidently, and ultimately that confidence and knowing those facts and knowing the risks and how we're mitigating that, that gave everybody the comfort to invest in me.
Yeah.
And so I give people like don't just kind of roll in kind of not prepared either, because I've had some very, I mean, we were just on a call with an institutional and they had some very tough questions, good questions, but you need to know your deal and you need to know how it works. And so if you're getting into real estate investing and you're wanting to raise capital, that's also going to instill some confidence in investors too.
Yeah.
Is that you've done the homework and you're walking the walk and you're talking the talk. And so, I think that's important to know too.
I love very detail orientated investors that ask me a ton of hard
Yep.
questions because that really makes you a better business
Yep.
owner, doesn't it? I mean, when you get
Yep.
that investor that's like, you're just like sweating because it's like, whoa, these questions are tough. Like
Yep.
that is fun because they're just really challenging you and they're making you really think hard. I love those investors. As an LP yourself, you mentioned obviously you're looking for the right, the right sponsor, but
Mhm.
what else do you look for as an LP, or what do you when you're talking with your limited partners that are investing in your deals, like what do you think is maybe big things that are really important that maybe a lot of investors miss?
I mean, I think it's those soft skills, man, to be honest with you. I mean, you can fact check a lot of things, right? From do they have business and financial and real estate experience to what kind type of team? Are they vertically integrated? How much money are they putting in the deal? All of those things are important, right? But I go back to what I said earlier in the show, right? Which is these soft skills like grit and just tenacity and resilience in the face of challenges. Because I'm going to tell you, we talk about projections, we talk about investor decks, and we do our best, we to the best of our ability to paint the most conservative picture possible. But it's not the real estate's not like this. It's not just some thing that just goes up like a rocket ship or a straight line up. It's choppy. It's very choppy, and those downside or those down parts of the cycle. I'm looking for those skills in people. And I think that that's important to kind of start off with. But ultimately, I need to like, know, and trust the person. I'm gonna,
Yeah.
talk to them, and I'm gonna grow them a little bit. I mean, do you have a family? And it doesn't matter if they don't. I'm just saying I want to know a little bit about them,
Yep.
right?
Yep.
I'm not going to invest with them off of some Facebook persona or some shiny pictures that they have on their website. Tell me a little bit about yourself. What are your hobbies? What do you do outside of real estate? Right. And also understanding, yeah, who are the partners, and same thing with them too. Or if they have just team members, understanding who are the decision makers in the process and what is their experience and who are they, right? I think is important, right?
Yeah.
When you're trying to size up somebody as a real estate operator or a sponsor, really kind of let's dig beyond that surface level stuff. Let's peel back the onion a little bit. And who are they as a person? Because, and I think the one thing that I've learned through this down cycle is some people that I thought I knew, I didn't know. And the reason I didn't know them as well is because we haven't had a down cycle like this.
Yeah.
And things tend to get a little dicey with people whenever things start getting tough. And I'm not going to name any names, but there's just people that I would have never thought that person would have acted like that when things got tough, and they did. And so, I mean, asking them, hey, how do you handle a stressful situation? How do you handle it if, there needs to be a capital call, right? What happens if the lender calls the loan or some bad thing happens with the lender? Like, how are you going to handle that? Right. And really getting just right up in their face about it in a way. And then, I mean, that's really what I start with. And then, and over the years, I've whittled down to, now I work with 5 groups and, I know what they're going to do. And so, and I always tell people to be careful, but also spread your risk a little bit, especially when you're starting off.
For
Like,
sure.
don't even if you like a guy. I mean, I'm telling people this as a person that's raising capital, right?
Yep.
Even if you love me, I don't want you to put all your money with me,
Yep.
right? Put
100%.
it, spread it across multiple groups, multiple deals, multiple markets, not only to spread your risk, but, just in case you don't like that person or something happens with that person, right? You don't have all your money tied up with that one thing, right? And so I did that at the beginning and I spread it across, I think probably 15 groups, and then you start kind of realizing, okay, I don't like the way that they do this. I don't like the way that that company does that. And you start kind of finding out, okay, these are the 5 groups that I like,
Yeah.
and then you start kind of investing with them, and then second to that is the market, right? I mean, what do they talk about? Real estate is all about location, location, location. That is true. It really is. I mean, you
For sure.
invest in good, stable or growing markets, that, have either a stable population or a growing population. They have jobs or they have job growth, tax, landlord friendly, business friendly. All of those things are important, because they're going to allow there to be some tailwinds, even when there might be a macro situation like interest rates spiking, right? If you bought it in a good location, you bought it at a good basis, right? That's still going to hurt, but it's not going to hurt as much,
Yep.
right?
Yep.
So I mean, location is third, or excuse me, second, and then third to that is the actual deal itself. People are like, you don't care about the deal, and I'm like, no, because if I have a good operator and I'm in a good market, I know that person's going to take a crummy deal and make it great, and so that's just almost the downside, or excuse me, the end result of having two positive things up here. And so that's kind of what I look for as an LP, and I'd say anybody that's looking to invest should probably look at it through that lens as well.
Yeah. I mean, look, if you've got a good operator, you can't, that's who you're stuck with, right? You're stuck with the operator that you invest with. So that's not going to change. The location
Yeah.
is not going to change unless there's some major things happening in the city, but the location's likely not changing. The deal is, I agree. I mean, it's last and it's a long, it's not even just last, like it's way down
Mhm.
the two, because that deal is going to operate well if it's in a good location with a good operator,
Yep.
right? And if it's
Yep.
in a, if that deal, that could be the coolest looking deal with the best looking returns. But if it's in a crap location with an operator that doesn't know what they're doing, it's still going to fail. I
You're
don't care.
screwed.
Yeah, you're
Yeah.
screwed. And
Yeah.
so yeah, location, and not even just location of the city. Like if I go, hey, I really love Houston, Texas and what's going on there, that's great. But all areas in Houston aren't created equal. So let's
That's
make
true.
sure we understand why this location is a good location. So I love those things. Super important. That one thing I wrote down when you were talking about, just looking at these deals, and looking at the operator. Two things I see that a lot of LPs maybe make mistakes on, and just let me know what you think on these. A lot of LPs, I feel like, just look at the return only. They look at
That's
what
it.
return they make and they're like, oh, I like that deal. It's a 18 IRR. I'm going to do that one.
Yep.
And then the other thing that I hear a lot of people like, man, they got a big social media presence. Now, I don't know that. I mean, they got to be pretty
They
trustworthy
got to
with
be
that kind of.
legit.
They got to be legit. They got a big social media presence. They got a great website. Like they look pretty legit.
Yeah.
Yeah.
That's exactly right. Yeah, and I wanted to touch on one thing because you touched on returns, right? And we've seen the same thing, right? People don't know how to adjust for risk, right?
Yeah.
So I want anybody that's listening to this to look up what is risk adjusted returns, right? Because I'm going to tell you, I'm going to use simple numbers, right? That 20 IRR deal on a Class C property is different than that 20 IRR deal on a Class A property, right?
Way
It could be the
different.
exact same hold period. All that stuff is the same. My point is that Class C property is a lot riskier than the Class A property, and I want to tell you why. right? Because it's a lot older. The demographic is going to be a lot rougher. There's probably going to be a lot more CapEx that you're going to have to put into that, which is all risky. All of those things, if that doesn't come together, you're not getting 20 IRR. You might be losing money,
Yeah.
right? And so I always encourage people not to assume that an 18 IRR is the same as this 18 IRR. In fact, they're probably very different. And you have to be able, and it's hard for people to interpret risk, and I get that, but people need to understand that at least at a common sense, take a step back level, that not all things are created equal, especially even in multifamily. You could have a Class C deal on this side of the street and a Class A property on this side of the street, and the exact same returns. And I'm still telling you, it is a different risk profile.
Yeah.
And so people need to
100%.
understand that. And I feel like we're competing, with then, oh, so and so's got a 20 hour. I'm going to go invest with him. Okay, good luck.
Good luck.
No, I can't compete with that.
Yeah.
And we do a fair amount on, so to your second point, we do a fair amount on social media, but that's the glossy stuff. It's why it's called fake book for a reason, right, folks? Right? I mean, we're gonna be posting about our awards and all the other stuff. I'm not gonna post about how all the sausage is being made and the challenges that we've had over the years. That's just not what you do on social media. So, again, that's why you have to talk to a real person,
Yeah.
and get on the phone and not maybe if you're going to be, especially a significant amount of money, try to get on with the managing partner, the principal, or the lead, not the investor relations guy. Go up the chain and try to say, hey, I want to have a conversation with so and so,
Yep. Yep.
you know, and they should be approachable to an extent, right? It's not like you're asking for the CEO of Coca-Cola to, get on the phone with you because, whatever. Like, I mean, most of these firms are fairly small, and that you should be able to get on with the managing partner if and it's your money. So why wouldn't you try?
Yeah. I agree. I mean, that's one of the benefits of investing in as a limited partner in a private placement like this is that you can get in touch with the real people that are making the decisions. It's not like
Yeah,
you're investing in a publicly traded company. You can't get in touch with the CEO of Walmart if you buy their stock. Like that's just not
yeah.
going to happen. Maybe if you buy a ton of their stock,
Yeah, if
right?
you're Warren freaking Buffett,
Yeah,
I mean, like,
right. But if you're going to invest 50 grand into a syndication, you should be able to get in touch with um, the people that you want to get in touch with.
yep, yeah.
So, um, Ben, uh, where's where do you see Disrupt going? You guys are doing a lot of things. You're still. I know you're still going to grow. Where are you guys go? Where are you guys going over the next couple of years?
I mean, I think we're growing, but we're trying to grow responsibly, is what I like to kind of tell people, right? We were talking about this before the show. Like, we're really kind of dialing it back and not looking in markets that maybe don't make as much, operational sense.
Yeah.
From a property management perspective, we're vertically integrated, so we have our own property management company. So I really am focused on a handful of markets that we have a presence in. I have economies of scale in. I have good relationships in, and really trying to scale out from there. But our hope is to, we're at roughly 5,500 units. I'd like to double it in the next 2 years. I think there's going to be a fair amount of buying opportunities over the next, kind of call it, between 2025 and 2028, where we can kind of lock in some really good stuff and lock it in at a fixed rate and hold on to it. And, but I guess it's not all about unit count for me. I'm a big proponent of, I'd much rather have a lot less deals, a lot less units, and things are profitable.
Yeah.
Returns are
Higher
being hit,
quality. Yeah.
right? So it's all about quality over quantity. So I don't want people to get caught up in, 800 million in assets under management and all this other stuff. These are big numbers. They are huge numbers, but at the end of the day, that is not the end all be all metric that you should grade yourself against, right? It should be, are you providing the returns that you said that you are to your investors? Do you have a good, a culture at your firm and people love to come to work? Are you taking care of your residents and providing clean, quality, safe housing? Are you, spending time with your family? Do you have a good work-life balance? Like, those should be the things that you grade yourself against. And so, we're actively trying to scale up internally, and we've got roughly about 200 employees between the corporate and the property management company. But I'm trying to recruit great people so I can take more off my plate, because you get to a point where there's a saturation point, right? You can only work so many hours a day.
Yep.
And so for me and Ferris, right, our goal is to get a good COO put in the next 18 months and allow us to continue to, only work on the things in the business that we want to work on, and I think that's really our goal. right? And so if we get to 10,000 units, if we get to 15,000 units, who knows, right? I think a lot of that is market driven. I can go out and get debt on anything, but I think right now raising capital is challenging. And so that would probably be the only thing that would slow us down. Is there a market for retail syndicators, or excuse me, for retail equity within syndication?
Yep.
I think it's going to come back. I think people, are a little bit timid because of, maybe they've gotten a capital call that they did, or, there's the election coming up. But I think that's all going to start kind of rip roaring back once there's better news in the market. But that would really be the only thing that would hold us back.
Yeah.
And then finding other great businesses and complementary things that we can grow the bigger org into, right? And I think that's important. And we love standing up companies. We love partnering on stuff. And so I think that's going to be something that we're going to focus more on in the future. And then last but not least, I see an opportunity. If you can get a shovel in the ground and build something the next year or two, I think you're going to be in a great spot. And so, we've got 2 development projects that we're working on right now in Houston. And I think we're going to be one of the only things in both those areas that are just going to deliver in 27.
Why do you
And
think that's a good deal? Because we just had record amount of deliveries. So
yeah,
why
and
do you think that's a good idea?
you're gonna have a record amount of no deliveries,
Right.
like literally little to no deliveries in some of these markets.
It's going
And I
from a
think
flood to just the spigot
nothing.
gets completely turned
Yeah.
off, and maybe you got a drip, but
Yeah. And these are in Texas markets where there was a
growth.
ton of deliveries, and there's
Yeah.
still going to be a ton of deliveries over the next 12 months. But there's so much population growth that all that's going to get absorbed. And then you're going to come up to 26 and 27 and 28, where there's not going to be anything that's going to be delivered,
Yeah.
right?
Yeah.
Or very, very little. Maybe in 28, you'll start seeing some more. But all of that's good for developers, because now people are hungry to buy deals and like, oh, brand new product, let's buy that up. We haven't seen one of those in a while. And it's also going to lead to rent growth,
Yep.
right? Because there's
Yep.
less and less supply coming online. So it's not going to push or put pressure down on the A minus and the B and the C stuff. And so everybody's going to win if you're a real estate investor, because your rents are going to go up, right? So that's why I'm a bullish on the 26, 27, and 28 timeline, because I think there's just going to be a lot of things that are going to come together between interest rates, low supply and delivery into these markets, and I think there's going to be that golden kind of opportunity. Probably the best, 3 years of the whole decade is going to be those years.
Yeah, I
And
mean,
so
if you start that development process now, you're not going to get that
it's
delivery done until 2027 anyways. It's
That's what I'm saying. It takes a year
yeah,
or two between finding the land, entitling the
going through
land,
all that. Yeah.
doing all the construction. I mean, I just
Yeah.
know we've done another project before. It just takes 2 to 3 years,
Yep.
and so, we're bullish over the next kind of year or two on development stuff too. It's hard because we're not the smartest guys down. We're not the only ones that know this, right? And so, especially in Houston, where there's developers are king and there's no zoning here, you got everybody piles in, and then you don't really get a good land deal. So, but point is I'm that's another phase of Disrupt Equity, and something that I'm excited to kind of work on, because if you think about it as a real estate investor, that's the ultimate value add. You're taking
Yep.
a raw piece of land
Yeah.
and you're
Yeah.
creating something brand spanking new on this piece of land. And I love
Yeah.
that. And that's really why I got into real estate, is to make, crummy looking things look beautiful, and,
Yep.
and development's just the next evolution of that.
Yeah, I love that. And you're spot on. I mean, that's exactly what's going on in the market, and there is opportunity in development. Of course, you still got to be careful. You still got to be smart about it. But yeah, there's a lot of
Of course.
opportunity there. And I think people are going to do really well if they can find the right piece of property, put the right, uh, it's got to be the right product for that sub market. I mean, that's the keys. You can't just slap something up and think you're going to make money, but I
Yep.
think that's a great strategy. You guys also have MFIN,
Yep.
the
Yep. So,
conference.
we do the MFIN conference. We've been doing that since 2019. I think we'll be our 14th or 15th one. We're going to do that February 1st in Houston. So check it out, investornetwork.com, if you guys want to check it out. Just coupon code Disrupt for a little bit of a shameless plug there.
Cool.
But it's a no sales pitch event. We're not selling any coaching or training or anything. We typically have a lot of great panels, a lot of great speakers. It's just an opportunity for people to come network, learn, and we have everybody from somebody that's never bought real estate to colleagues that have thousands and thousands of units and anybody in between. And so we're really, really proud of that, and we'll continue to kind of build on that brand throughout the years.
Love it. All right, Ben, I got a couple last questions. We got to wrap up here. Appreciate your time, first of all. So, favorite book?
It's got to be Rich Dad Poor Dad, right? That was just the light bulb moment for me in terms of real estate. And I think I read it back in 2010, and I was just like, I get it. I'm
Yeah.
doing it.
Yeah.
Yeah.
Yeah. That's a book that made my wheels start to spin as well. I mean, I think I read it back in about 2006 or 7, and I didn't fully take action and realize it then, but it started that journey of like, okay, I got to read something. Yeah, I read Rich Dad Poor Dad. I'm like, what else was there? What else can I read? And I just kept on consuming, but then finally started taking action. But it's great starter for sure. Okay. What are your 3 pillars of wealth creation?
So, I mean, obviously it's real estate first and foremost. I think, secondary to that is kind of the private equity buying businesses, I think is going to be a blue ocean strategy in the next 5 to 10 years with a lot of the baby boomers retiring.
Yeah.
So I encourage people to kind of look into that. I think there's a lot of opportunities to create a tremendous amount of wealth in that space, and then I think obviously, I'm a big proponent of crypto. I think, the only thing that could really kind of be the black swan for that is if they come and overregulate it or outright ban it. I just don't see that happening in the United States. I think with BlackRock and some of these bigger firms getting behind it, creating ETFs, I think it is the wave of the future. Now, I'm not the guy that's going to say that it's going to go to 1 million, but my point is it's at this point, I think it's tried and true. Bitcoin specifically, I'm not talking about all the other little crappy coins,
Sure.
that are more kind of almost like penny stocks. But I think that is, if you can have a little bit of money, just a small bit, I think you're gonna thank me in 20 years.
I'm not a big crypto guy, but I do believe that it's a smart strategy to have some money in it, and
No, and
money
I'm talking
that
about
you're okay
small.
to lose.
Yes,
But
it's still risky. It's still very
yeah,
volatile. And so, and ultimately I can always throw in stocks. I mean, I've got a big stock portfolio too, right? And but
yeah,
just on the creative kind of called alternative asset side, those would be my 3 buckets.
yeah.
But yeah, crypto, like 2% of your portfolio, folks. Nothing more, and agree with Todd. Don't, unless you're prepared to lose it, don't invest it.
Yeah, I mean, look, I mean, I think you're going to kick yourself if you don't. I agree with you. You're likely correct. Certainly, there's still risk to it, but I think you're going to kick yourself if you don't do anything. You just sit on the sidelines and watch everybody else playing it, and all of a sudden, it's like, man, I really wish I would have done that.
Yep.
Okay, well, Ben, look, man, I really appreciate it. I appreciate your time. Tons of great value you've been able to add to us. Listeners, go to look up the Multifamily Investor Network coupon Disrupt. Ben, how else can our listeners get in touch with you?
Yeah, check us out. We're on all the social media channels, but our website's www.disruptequity.com. Check us out, and reach out to us, and happy to talk shop, answer questions, and add value wherever we can.
Awesome. Ben, again, really appreciate you and the value you're able to add, and you have a fantastic rest of the day.
All right. Thanks, Todd. Appreciate you.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out. And we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.